Welcome back to Uncontested Investing. I'm Tim Harris. Thank you so much for swinging back by. Today, we've got a great friend of mine and kind of a rock star in the industry, Tarry Summers.
Well done, sir. Well done. I like the rock star analogy, man. I've always wanted to be a rock star, so that's good.
You're in the state of Cleveland, right?
I'm sorry, the armpit of what? The armpit of what? Yeah. That's what I thought.
Columbus, Ohio.
That's right. The Columbus, Ohio. Everything is the
Columbus home buyer. Oh, everything's
everything's
the University of Ohio or Ohio State.
The Ohio State University, the Columbus home company, the Tarry Summers. Yeah.
The pro.
I'm kidding. Yeah, there we go. Yeah. It's just a Columbus thing.
Now you get a preview of how this episode will go. Terry, take a minute. Tell everyone a little bit about yourself.
Man, Tarry Summers, the Columbus home company, and I've been in real estate for about 13 years. I started off just seeing what was going on in the marketplace and have my little entrepreneurial epiphany. And I decided I wanted to buy a lot of houses. And so I started with one. I saved up every dollar I had, which was like $5,000 at the time, and decided that I was going to do an FHA house hack, which a lot of listeners will understand and appreciate that. Did my first house hack in 2010. Parlayed that into deciding to sleep on my buddy's couch for a couple years, and ended up buying 6 houses on his couch while I was paying him $250 a month in couch rent in his basement, unfinished basement, by the way. But yeah, man, no, I just got addicted to it, man. It was, once you understand passive income, you understand the wealth that, especially the real estate business can generate for you long term. It's addicting, man. It's addicting. So
we'll get into your door count later.
Listen, you did get your vinyl doors, right?
I did. I got my vinyl doors, my cat doors, my cabinet doors, my garage doors.
Listen, I just replaced some
top of French doors.
I just replaced some sliding glass doors today,
and you get to count them all.
I count on every single one of them.
There's an inside joke there that we will let you inside of in a minute. But Terry, the first segment every week is the bluff, the bottom line up front. When I was in the Marine Corps, they always said, when you're briefing the general, come out with the most important thing first in case he has to get up and leave. And I like to do that here because I start a lot of podcasts listening, and I don't really finish them all. I mean, someone will call, or you have to pull over and get gas. Just things happen. So let's just take up to 2 minutes and tell the listeners the most important things you see in today's market, things you think people should be focused on, things you think people should be avoiding, things to be aware of, just kind of the cliff notes of what we'll talk about for the next 30 minutes or so. Good to go?
Love it. Let's go.
Go.
So number one is you do not want to get influenced by the Instapreneur, the person that's on Instagram, probably in sunglasses, probably got a watch on, probably got a shirt on with a hat that's like, the same as mine. You want to avoid these people at all costs because they are going to be the biggest cost to your future success, okay? That's number one. Number two, find a mentor that you can vibe with, all right? These people are everywhere and you're going to find them, but just avoid the people that were just like that guy behind me earlier. Just kidding. But in all seriousness, the market today, I really, really believe that the United States real estate market is going to be permanently expensive. We're all seeing this, right? I mean, inflation's been crazy. Interest rates are crazy. If you look across the world, Canada, Europe, Australia, you look at all across the world, real estate is permanently expensive in some of these places. You already see it in the United States in places like California. Behind me, Austin, Texas. This is like one of the hottest real estate markets in the country. And me being in Columbus, Ohio, I'm literally peeking into the future of real estate. So, everyone's like, oh, interest rates are crazy. And, I don't want to borrow money right now. And it's too expensive. I'm just going to wait. The worst thing that you can possibly do in real estate is wait. You need to get in the game. You need to get involved. What do they say? Marry the property, but date the rate or something like that. I have no idea what that whole thing is. But, if you're a person that just has, a couple properties, no properties, whatever, just get involved because you're never going to regret it. I have never met one person in my entire life that has said, man, I wish I would have bought real estate later. They always say I wish I would have bought real estate earlier. I wish I would have hung on a little bit longer. And so, when you listen to people that are older, wiser, just been around a lot more than we have, you got to take note. So my thing is, I always try to listen to people like that. And, I've never heard one person say that they would have waited to buy real estate.
Terry, that was some good stuff. And if you're listening and not watching the video, the person with glasses and the watch he's talking to is Terry's partner, friend, partner in crime, business
Bobby.
partner. So he was playing a little skit behind him. So watch the YouTube version, trust me. All right. So I want to dive right into that though, because you've got a Range Rover, Land Rover, whatever it is, and a boat and watches, and you're not flashy, but you're not dull. What makes you what makes you different than what you described?
So the thing is, I don't care about any of that stuff, right? Like, I'm not a watch guy. I'm a classic car guy. That is like one of my guilty pleasures. I love classic cars. But I'm not the guy that's gonna buy a Lamborghini or a Ferrari just to be able to take pictures in front of it. Be like, oh, look at me, right? For me, it's more so, okay, how much time can I spend with my family? How much time am I, devoting to, things I want to be involved with? How much time am I spending with my kids? Those are things that are really important to me. That's the real flex. But the problem is when you get on Instagram, when you get on YouTube, when you get on social media, right? People that are listening to this, they have to be intrigued, right? Very smart mentor of mine, he said, you have to sell the sizzle and give the steak, but you got to sell the sizzle. And so for me, I mean, I like stuff, don't get me wrong, and stuff sells, but at the same time, like, I don't need it, man. Like, take it all away. Like, I'm not that guy. Like, I'm the type of guy, I mean, we've hung out, many a times. And dude, I'm just that normal dude that likes to throw darts and, maybe hang out at a pub, And
nicknamed the CEO of RCN.
Correct. Yes.
Yeah, give me
J Money.
Random nicknames for corporate executives. So I want to go back into that because you first met me in 2013 at one of my REI expos a long time ago.
April 27, 2013.
Yeah, you made a comment to me when you told me about that. You were like, I saw you up there. You're this young guy. You're like, oh, I mean, I can do that. And then we reconnected by me kind of following you through some interactions you had with Mark Evans, mutual friend of ours up there in Cleveland. Is that
Cleveland City? Yeah, Cleveland. No, it's the armpit city.
It's the armpit.
Sorry if you're from Cleveland.
We love you, Mark. And then like we got to know each other. I kind of met you for the first time where we knew each other at IMN, where they invited you to speak, and I thought that was just a great idea. And I've got to know your business in the last year or so. The thing I like is you practice what you preach. Like you believe in keeping assets. Like wouldn't you say, is your core business keeping real estate? Is that the core business?
That is the core business. That is the business.
Right.
That's everything, right? It goes back to, what I said before is I've never met a wholesaler that said, man, I wish I would have kept wholesaling. I've never met an old guy.
I'm glad you don't own any houses.
Yeah, I'm glad I sold all my house. Everyone you meet's like, man, if I would have just hung on to that house for a couple more years, man, that thing would have been worth X, right? And we always hear that story.
Right.
And it's like, why don't we just listen to people that are older and wiser than us?
Right.
And so, we try to do everything that we can to be able to own and hold assets over the long term. And, I mean, that's how you get wealthy, right? I mean, rich people do not get rich by making an income. They get rich off of making assets and then borrowing off their assets.
Right. Stacking assets. So, I've been to a lot of masterminds in the last year and a half or so since I've been kind of getting back in the game. And I came up to your Scalers Only mastermind in Columbus. Is that a mastermind or an event? Am I saying it right?
Yeah, no, for sure. It is a mastermind.
And one of the things I liked about it is you're the only one so far in the last year that didn't just keep putting kind of subject matter expert after subject matter expert only in the real estate or wholesaling or flipping game. You had a financial planner come up. You had a guy come up and talk about, I want to say, 1031s.
Yeah.
You had
that was dope, by the way.
Yeah, it was. And then you had this other guy that built a 400-something house portfolio in Virginia, all off of his dad's
That was
money.
crazy, right? Yeah.
He was I mean, you talk about the ultimate.
That's correct.
I'm gonna say shell game, but it wasn't a shell game. It's like, all right, this family member has 20,000, so I can do this with them, and all right, this one has 50,000, I can do this with it. And like
wild.
Like he spent an hour telling us how he ran around his entire family, running up everyone's lines of credits, and now he owns a couple hundred houses free.
Yeah.
But I really like the content you put on because, what's the guy's name? The money manager with the lines of credit.
Oh, Peerless Wealth. So Eric.
Yeah. Like he and I had a talk. Like, what a great concept. He's like, you don't have to be one of these real estate investors who says, oh, I don't buy stocks, I buy real estate. He's like, buy stocks and then borrow off your stocks to buy more real estate. It's just
exactly.
It's just genius, right? Like, so would you talk a little bit about? I've heard you talk on some of your podcasts, and I was on your show last year. How did you learn all this stuff? How did you learn to put together 1031s and lines of credits off of equity portfolios? And where did you learn all that? How did that form your kind of plan? And then where do you see that developing and going from here?
So one of the things that I always do in Scalers Only, especially in my mastermind, is I'm always preaching the stuff that I already do. And it makes it so easy to run them out because you're not faking it, right?
Not theory.
It's not theory. It's like, hey, here's the stuff that I'm doing. If you want to do this stuff, this is exactly what I'm doing. And I can put my stamp on it because I'm actually doing it.
Right.
So that's number one. Number two, I've really always dove into the compound interest theory. So the eighth wonder of the world is compound interest, right? Benjamin Franklin said that, I think, right? And for me, once I understood it, and I'm like, this property is going to appreciate in value. Someone else is going to pay down my debt. I'm not paying any taxes. If I want to sell, I just defer the taxes until I die, right? And I can just keep trading up. Dude, this is what the government's telling us to do. Like, why wouldn't we just follow the guidelines that they've set out for us in the tax code? And, the tax book is, God knows how thick, but all you got to do is just follow it and look at a couple pieces of information and you can exploit it, right? Exploit's the wrong word, but that's what they're telling us to do. They want us to provide jobs. They want us to provide housing. So how do we do that? We have to start somewhere and we have to continuously trade up. So I've just always taken, I don't want to say, I'll use the word pride. I've taken pride in every single asset, whether it be a person, property, whatever that's involved with my organization. There's a compound interest number. There's an opportunity cost to that asset, right? And people are assets too. And so, okay, how much money is this asset going to make me over 3 years, 5 years, 10 years? You look at the Grant Cardone model, for instance. This dude doesn't hang on forever. He sells in 3 to 5 years once he's figured out those compound interest curves and he's figured out, okay, if I 1031 this, then I can trade into X that's 10x bigger, right? But it's the same concept, man. It's just compound interest at the highest level.
Some of my favorite spreadsheets to build when I'm going into like data nerd mode is I'll start out at like $100,000 and say you paid $100,000 for the house and borrowed $100,000 for the house and it's worth $100,000. That's very unsexy.
Yeah.
Right? But once you start linearly compounding the appreciation and then reducing the principal, it can still be a great deal if it break even cash flows.
Absolutely.
Like, it's just amazing to watch those numbers, how fast they start spreading.
We talked about this at the mastermind, by the way, the one-day event that we did in Columbus, Ohio. But we talked about the hockey stick analogy, right? So when you buy something, if you flip a hockey stick upside down, because we're always buying it 75 or 80%, or else we can't borrow money from guys like you in order to do the deal, right? But then, once we get in there, we get this appreciation run up. And I hate using appreciation because everything I do in my business has to cash flow. For instance, every single door that I own, it's funny, right?
Yeah.
Every single door, right? But, I have a model where it's got to be $500 after PITI. That gives me, if a furnace goes bad, HVAC goes bad, roof, whatever, on 1,000 square foot house, I can cover it and cover my nut. But anyways, going back to the whole run up, we're buying at the bottom, we're buying in path of progress. So we get this massive run up in appreciation. And then eventually after, it might be 3 years, 5 years, might be 10 years, there kind of gets this like stale point, right?
Yeah.
Sell it and then take your money, go put it in the stock market, right? And get your 10% or 12%, buy some structured notes or something cool that's going to return you some extra percentage, and then just borrow back off of it and then continue to do what you do in your real estate business. So I don't know. I'm just always looking at compound interest because dude, every little percent matters, man. Every little percent matters.
It really does. And, I want to talk a little bit about your core business for a second. When you got started, did your family just give you like $20 million?
Man, I wish, dude.
All right. So we've established you weren't given the golden spoon, right? So you got started. You said, I'm going to start buying these houses. I know you teach a lot about working with community banks and leveraging those type of relationships. See where I work leverage in there.
Well done.
Talk about, if you would, your strategy with both debt and the equity you have to put into houses. Because I want to ask, though. Let me ask. I mean, you have what, like 10,000 doors?
If you count my doors albums that I have, my cabinet doors, my sliding glass doors,
double garage doors.
Yeah.
But so you own, I know, more than 100 homes.
Yeah. So I'm down to 257 doors, single family assets. I sold all of my apartments at the beginning of 2021. I seen what was going on. And now what we're starting to see is
there's a fist bump in case you weren't watching.
Yes. So, these apartment guys will all tout that, man, I got all these doors, right? And they'll pound their chest. The problem is like, yes, they're cash flowing because they refinanced in 2021 or the beginning of 2022, but trying to sell on the back end, any business, any property, anything I get into, I'm always looking at how do I get back out?
Right.
And with rates the way they are in commercial, you ain't getting out. No. You're stuck in that deal. The cool thing about residential is that it's a commodity. It's like food, water, shelter. An apartment is only worth what another investor is willing to pay for it. The cool thing with residential is it's worth what someone is willing to pay for it to have their family live in there.
Right.
It's one of the three commodities. It's food, water, shelter, man. But it's not
need.
It's a basic need. And so with that being said, even when rates go up, people are removing their houses from the market because they're trapped in their mortgage rate. But the people that do, it makes their property values go up because...
How did you get to 257 properties without a massive shareholder or investor or family member staking you?
So I think one of the biggest things that anybody can do as a young person is, even if you are married, sell this to your wife or sell this to your husband. Sell them on new experiences. Hey, we're going to go live in this new neighborhood. Okay. I sold that a lot of times.
I'm hearing.
Okay. The first house I bought for $79,423 on an FHA house hack. Okay. That house is probably worth $300,000 now. That was 12 years ago. I sold that house at $125,000. All right. So I didn't get all the run up from it, but I got some of the run up. Okay. The next house I lived
50% increase.
868 Obets. Lived in that thing with a bunch of my buddies. We were painting it on Saturday nights, and I'd bring them what those, they call them cubes of Natty Light. I think I'm not a Natty Light guy, but
I don't know, but you brought the beer after the painting, right?
Yes.
Yeah.
You
don't want to.
Yeah, you get them too many beers at 3 o'clock in the morning, they're not painting real good. But it gets done. But I lived in a lot of these houses. I think the longest that I've ever lived somewhere in my real estate career was 16 months. So I'm always like,
wow.
So I'm always, I've always been using that. At the same time, it's like every little bit of cash I have is going into a property because that's opportunity cost that's going to have its compound interest do its magic later, right? And so, especially at my job, it was like every 15 grand I got, and I'm talking saving, living in my buddy's basement, doing all that. Dude, that 15 grand is a house that you can put a down payment on. And hard money didn't exist. And everyone's like, oh, I wish I would have bought houses in 2010 or 2011, 2012.
There wasn't any money.
There wasn't any money, right? And so now we have this unique dynamic where there's all this money, but there's no deals. Back then, there was all these deals, but there was no money. So you had to go figure out unique ways to be able to structure your deals on the money side. So, it's just, dude, it's literally every single little bit of cash you have, deploy it into an asset that's going to give you compound interest later.
So you just mentioned you had a job during that time, and I think that's where we'll start after the break, because one of my favorite books by Robert Kiyosaki, it has something to do with things you should know before you quit your day job.
Yeah.
But no one ever talks about that book. It's not sexy. It's not attractive. It's not exciting. They're like, wait, you need me to keep working? I just want to be the rich dad and the poor dad situation. So hold that thought. We're going to take a break. Be right back. Stick around. We'll be right back. At RCN Capital, we know that time is money. With our competitive rates and quick turnaround time, you can receive funding in as little as 10 days. We offer flexible payment plans to relieve the pressure of repayment process. Our team is experienced in making sure that you choose a loan that will suit you best. Get on the phone with the loan officer today by emailing info@rcncapital.com or clicking the link in our bio. Welcome back to Uncontested Investing. Tim Harris here. I'm still with Tarry Summers. Terry, I want to dive right back into delayed gratification. Because it's
Love it.
like I look at some of these wholesalers, and I'm not going to single anyone out like Robert. I'll never forget this guy, Robert. This is back in probably 20 teens, somewhere in my career. He's just struggling wholesaler. We JV on this deal, and he made like 20 or 30,000. I don't remember. Dude pulls up the next week in this brand new Toyota Corolla. Took him like 8 months to make a penny in the business. And I was like, Robert, how'd you go buy a new car? He's like, oh man, I'm making 20 grand a month. I'm like, no, you're not. You made 20 grand in 8 months. Like, the math is so far against you. But you see it a lot, man. I mean, when I was a Home Investors DA, development agent, I always loved the franchisees that struggled out of the gate. Yeah. It was the ones that got the big hit at the beginning that you knew would fail because they're always chasing that shiny object, that big check, and they're letting a lot of singles go by. Would you talk about maybe where you learned the delayed gratification strategy and maybe even like tell the story, that turning point when you decided it was time to go full time?
Yeah, man. So I think, especially starting out, if you have a W-2, use it. And I had a lady that told me one time, as long as they think that they're using you, use that W-2. And that just always stuck and resonated with me. And because you can use your W-2 to be able to finance a bunch more rental properties. For me originally, I was knocking down, anywhere from 6 to 9 grand a month in 2011, 12. That was a lot of money. Might be a lot of money now. I don't know. But, back then I was like, dude, if I can just get 8 grand a month, which is like, every property making you $400 to $500 a month, everything goes perfect.
Right.
So that was my original thing. It's like, dude, I became obsessed with that number.
Kind of like doubling your salary.
Yes,
almost.
Replacing my salary was the number one thing, because then I knew if I replaced my salary, I could go and continue to get financed for more rental properties and then continue to grow, right?
Yeah, unless you're in Texas this summer where I'm losing an AC a week.
Oh my!
Right, and it's like it literally it's
dude,
7
it's like
to
107 degrees outside.
It's 7 to 10 grand a week right now for me. I mean, it just doesn't stop.
It's wild, man.
So, but you were talking about that earlier about saving the money back for when a boiler or something goes out. I don't want to mute.
Yeah, no.
So the idea was to replace your salary, and then how did all that progress?
For sure. So from April, or what was that? May of 2010 up until April of 2013, I just became obsessed with this concept of making 8 grand a month in passive income. And I went to a W-2 job at Chase Bank, the most predictable income that you possibly
not going out
get.
of business, they're
right?
just growing. They're sucking up all these failed banks left and right.
So when I left my fitness job, I was like, I got to keep getting financed for these rental properties. And the job became such I was in a very, very depressed place at this point. I mean, I thought about suicide. I mean, it was bad. When you're sitting
just when you were on the couch or before you started
this is after. So yeah, I had 16 properties when my fitness job got sold to another company. And then so I went to Chase because it was the most predictable place to get an income. So when I went to Chase, I'm sitting in this cube 12 hours a day, and you're seeing these guys, they always talked about, the 200-300 grand that they would make. But this was back in 2006, 7, 8, when mortgage brokers made that type of money. And I was like, well, dude, I can't sit here for 13 hours a day. Like I'm literally going to go insane. And I Googled one day if I could gouge my eyes out and kill myself. Like, it was that bad.
Oh my God.
Like it just, my mind was just not in the right place. Right. So I was like, dude, I thought for sure I was going to be at this Chase job for 2-3 years. I was like, I can't make it another 2 or 3 days. So I put a string of deals together with 16 houses and a triplex, closed on all of them on a Wednesday. the last one on a Thursday, walked into my job on that Friday, April 12th, 2013, and was a little inebriated at the time, and told my boss, hey, I'm out, man. And
Did you get sauced at breakfast, lunch, or dinner? Like
I got sauced at dinner, and then dinner ran into late night, and then that ran into breakfast, which ran into lunch, and then
So Terry's advice is do not drink all night. Then
now and then go quit your job because you're never getting a job again. But I knew as well, like, you know, if I did it in a way where I couldn't go back, like, you know, I couldn't go back.
So you think you may have been intentionally sabotaging that to make sure you didn't go back?
Yeah.
Burn the boat.
Yeah, I burned the ships.
Yeah.
Definitely did the burning of the ships.
So now you're unemployed, hungover, and you own 19 doors.
30, 34.
Oh, so it was 19 more.
Yes.
Oh, wow.
Yeah.
Okay.
16 more.
16 more. All right.
Yep.
So now we just got 16 more. We double the size of our portfolio
in one day. And everyone's like, oh, like, how'd you do that, right? Like,
How did you do it?
MLS deal here, off-market deal here, wholesaler here. You know, there was a bank, Guernsey Bank, you know, had a property. It was onesie twosie everywhere I possibly could. There was 3 different deals that wasn't a portfolio, but it was just putting all these things together, knowing that I was going to go quit right after I bought all this stuff, right? Knowing that was going to be the replacement of the income. So then that way I knew I was good. If I just got this stuff stabilized, rented out, I was going to be able to get financing for more rental properties after the fact, and I didn't need the job anymore.
Very nice.
So
then what happened? Like you immediately jumped to 200 houses. You know,
yeah, I wish, man. I wish. Right?
Let's talk about, you made the transition to being full-time. Let's talk about some of the mistakes that you made in that time period. Maybe houses you bought you shouldn't have, or money you should have put back that you didn't. Let's talk about that.
For sure. So right after I quit my job, the banking, they pulled back because I didn't have that W-2 predictable income. And one of the things I started doing is I started paying cash for houses and then trying to leverage them after I bought them.
Right.
You know, I heard this from a guy, smart guy, Dean Graziosi. He's like, yeah, just buy them cash and then go refinance. And I'm like, yeah, I'll go do that. The problem with doing that is when you pay cash for houses, you start buying shittier houses. Sorry for the language, but that's what you buy. Cheap. You buy in neighborhoods that are less than desirable. And my business model has always been buying blue collar neighborhoods where you can sell to an owner occupant or you can rent and still cash flow, right? You have multiple exit strategies there. But if you're just buying doors to buy doors, you buy crappier doors. So that was a big mistake I made because, I mean, those houses, I was stuck in those houses for 5 or 6 years before I could even get rid of them, you know? So when you're buying houses, you see houses less than 100 grand, dude, run. It's going to be trouble. You're going to have all types of maintenance. They're probably old. Your tenant base is going to suck, and it's going to suck up your time too, which is the most valuable asset out there is your time. So that was one of the mistakes I made 2014, 15, and 16 is I'm like, yeah, man, I'm going to have to buy more. And then I got obsessed with the concept of buying doors. And when you get obsessed with that concept, what do? You buy crappier doors because you're looking at a price point, and it's the worst thing you can do.
One of the things I say, one of the first questions investors ask each other is they say, well, how many houses do you own? Or how many doors do you have?
Dude,
what do you own?
Question.
And I always laugh now that I'm in the position I'm in. I'll say, well, you're asking the wrong question. And they're like, what do you mean? I was like, you don't mean how many, you mean how much. And they're like, what? Blackstone doesn't talk about they raised a 7,000 unit fund. They raised an $8 billion fund, right? It's how much. It's not how many, right? I mean, assets under management. I always joke around. If I want to make $1 million a year and I can buy one house and make $1 million and then take the next 11 months off, sign me up.
Absolutely, 100%, man. I mean, that'd be great, wouldn't it?
You can get up on the stage and talk about the 300 you flipped, and I'll talk about the one I flipped, right? So I agree with you in that, like, don't get obsessed with the numbers or putting wins on the board. Stay focused on the equity and the cash flow.
Equity, cash flow, and profitability, man. You know, and when you look at your P&L and your balance sheet, every month, look at how things are increasing, right? And, you know, if your cash flow sucks this month because you had all these ACs that went out, boom, okay, where's your balance sheet look like?
Right.
You know, so just some things, especially for real estate, because you're making money 4 different ways. You're making it on the cash flow. You're making it on the appreciation. You're making it on the debt pay down, and you're making it on the tax advantages. So if you're looking at it from a 4D perspective, even though if your cash flow sucks that month, right? Well, you're making money 3 other ways. If your cash flow is great, well, guess what? You probably deferred some maintenance too. So your balance sheet's gonna take a hit. So you just got to look at it 4-dimensionally.
Where'd you learn all that?
Experience? I don't know. Insta gurus on the internet.
You may hear the peanut gallery. That's Bobby again.
Nice shirt, by the way.
I want to now go back to something you said in the first segment. You said, once I understood, and you were talking about compound appreciation and compound interest. One of the things that's impressed me the most in the last 9 months of getting to know you is I'll talk about something that you don't fully comprehend, and you will slam the brakes on the conversation, and you'll be like, no, go back. What is that? Tell me about it.
Yeah.
How does it work? And like, it doesn't matter if we've been drinking for 3 hours or if we're just sitting here like this.
Yeah.
And I respect the heck out of that because that's the way I am. It's the only way I got to where I am. I'd sit in these boardrooms and people be talking about all this jibber jabber. I'd be like, time out. What's a DSCR?
Stop.
Yeah.
I need to know this.
Oh my God, you said that to me in the back of a Suburban, and I am in.
Yeah,
in
man.
Miami,
Yeah.
and you go, stop. I need to know this.
Yeah.
I want the audience to learn about what taught you to do that, how you do it, and why it's so important.
I think, I mean, we'll call it what it is. You're a little bit older than me. You're a little bit more seasoned. Let me put it that way, right?
I'm older.
Yeah. And so I know when younger guys actually have that tenacity and they come up to me and you know that they're a killer and they come up, you want to help them, right? I call it the life cycle of the real estate investor. You know, we want to pass things down, right? That's how we all make money. You know, eventually we wholesale, then we flip, and then we rent, then we become the bank, and then now we got to find young guys to be able to ride the backs of.
Still partners.
Yeah, exactly.
So we can not work.
Exactly, right? But we come into different parts in our lives. I was in a conversation with a guy yesterday. It was from Austin, 62 years old, and you know, he was willing to sit down with me because I was just asking questions, and I said, man, I really appreciate your time, but I'm super engaged, and I just want you to know that I'm listening to every word that you say. But you got to catch people at the right time too, right? You don't say, oh man, can I go get coffee? Dude, if you can't get coffee with the person, just pay for their time.
Right.
If they got a mastermind, just go join their mastermind, right? Because their time is so freaking valuable, and the amount of time that you're going to save is so freaking valuable. But if you can catch people on the right time and say, man, I don't understand this. I need to understand this. And you know that person is going to eventually be successful in your own life too, right? I mean, it's kind of what we do. I mean, there's wholesalers like, man, I just need to know, and you know that person's going to be successful. Do we not want to help them? Of course we do.
Right.
So I just ask questions, man, and I listen. And when someone is old, I always use this. When someone's older and wiser than you, shut up and just listen, because they've been there, man.
Right. You know who Bradley is, right?
Oh yeah.
So I met Brad at a conference in January. You know, I've been in a little bit of a social media black hole. I didn't even know who he was. Then I found out he's got like millions of followers. But I liked him, and we sat in the green room together at this conference, and I just, like, he was a real authentic dude. We connected on Instagram, and I saw him offer this real coaching up. I was like, that's $300 a month. I'll join. Because there's a part of me that's interested in maybe one day doing something like that, like once I'm not so busy with what I'm doing. And I love that model. I love helping people. I love the idea of like being able to do it in a very real way, not a salesy, way. And it was funny. So I joined, and I get into his little Discord server, and I get onto his online coaching platform that he owns and licenses out. And I dial into these Zoom calls. A lot of time, the stuff being discussed isn't necessarily applicable to what I need. But for me, because I'm an old seasoned entrepreneur. A lot of these people are younger business owners, right? But for me, I'm there to study the way he does it. I'm there to study the way he engages his members. I'm there to study the way he conducts the Zooms. I'm there to study the content, the schedule, the engagement, everything. And
the community.
Yeah. And so I've probably paid the guy a couple $1,000s and only been on 5 or 6 calls. And my wife was like, are we going to keep paying? I was like, yeah. I said, because I never know when he's going to send an email out that'll teach me something that I need a couple years from now that'll maybe a couple $100,000, right?
And the thing is like I remember a conversation specifically. It was actually on one of our Scalers Only calls in our mastermind, and you're like, hey, I think it was 2007 or 2008, because I never burned any bridges with banks. I had one bank that carried me through this hard ass time that I had in my life. But had I burned that bridge in 2006 and be like, oh, everyone's loaning me money, I wouldn't have had that lifeline then. And so like, there's little stuff like that you pick up, and once you hear it, you can't unhear it, man. So like going through whatever we're about to go through with the economy and everything else, man, it's things like that I listen to, I pay attention to, and it's just seared in the back of my brain. But you never know, like when you're going to pay, a couple $100s or thousands or however much money, right? And you get something that's seared into your brain so hard that when you're going through this hard times, because it's going to happen, right? The market, you can't beat it. You can only join it. You're not going to beat it, right? So when it happens, and for all the young guys and gals listening, it's going to happen to you. And you're going to go through some hard stuff. And when that market beats up against your door, no pun intended, like, dude, you're going to lean on some of that stuff that you heard from a mastermind or from some mentor or something that's just been seared in the back of your brain.
I just love it when someone says something in a room too where they're not even talking to me, but the advice they're giving someone else either helps me fix a problem or explain. I like it when it translates a feeling I've been having, but I haven't been able to put into words. So it happened here in Austin last week. I'm over at Kent Clothier's mastermind, and a guy was presenting. He's knocking down like $6-7 million a year in gross revenue. He's netting over 3, flipping houses in the New York area.
Okay.
And he needs to hire a CFO. That's the part of his business that he's got the wrong people in the process, and he gets pulled into it. And he was kind of sharing, and Kent was like, he goes, dude, you're trying to hire the wrong CFO. Don't hire C-level people to manage tasks. You got to hire C-level people to drive tasks. And I just kind of looked over at him and I was like, how'd you know I was having that problem? Like, and it's not about RCN. It's about some other things. I hire these people, and we as entrepreneurs do it. I don't want to do the books. Bam. You're hired to do the books. But you don't really know what should be done. You just know what I teach you how to be done. So you can't drive anything. You can manage the task.
Yep.
You can open the tax bills, which we talked about yesterday, and you can input them into the spreadsheet, and you can make sure the checks go out. But you're not going to come to me and talk to me about putting together a pitch deck because our EBITDA is this, and we can borrow at this life insurance. And I mean, you're not driving anything, right? You're just kind of like the passenger in my bus, and I'm still driving.
Yeah.
And so it was funny. Kent says that, and I'm just kind of like, and I've probably repeated it 10 times in the last 7 days because it meant so much to me, and it solved. Like, I hired an acquisitions guy in my old wholesale company that his job was to run the leads, and he was running the leads, but he can't drive let's change the offer formula, let's offer in creative financing, let's start owner financing instead of wholesaling, let's look at flipping these instead of he's just there to run the leads.
Yeah.
Right. He's not a boss.
One of the biggest things in real estate, though, is everyone feels like they can go do it on their own. And because the barrier to entry is so low, right? I mean, I'm very transparent in my business, as you know, and it's a good and a bad thing. If you hide everything from people, they're like, oh, man, they're making so much money and, blah, blah, blah. I'm just going to go do this on my own. But if I'm transparent with them, maybe I keep them a little bit longer. But eventually people are going to leave you because the barrier to entry is
right.
It's here. So for me, I realized really quickly that I'm just like a lot of other entrepreneurs, a lot of other business people, where I always see things through these rose-colored glasses, and I'm like, man, we buy for $200,000, we put in $50,000, we're making $500,000. I'm that guy. But then when you put it in a profitability matrix and you get your carrying costs, your taxes, the interest, all these other things, and then you run the real numbers, I'm like, damn, we're really not making that much money. Or if worst case scenario, we're going to lose money. Case in point, hiring an accountant in your office is if you're like me is the single greatest thing that you can possibly do, because it's that governor that you need that's going to be like, hey, man, I don't think this is a good idea. Hey, man, our P&L is looking pretty good, but our balance sheet, you know, we're going to have these roofs coming up, you know, we're going to have, you know, these hot water whatever, right? But at the same time, like, that person is going to be, it's going to be your Pippen if you're Jordan, man. That person is going to be everything for you. And so for me, like, hiring that person 5 years ago was one of the greatest things I ever did.
You're going to meet my governor tonight at dinner.
Yeah?
Yeah.
Oh, yeah.
Yeah. I'm like, oh, we're going to make $100,000 on that. How much really? It's like, I mean, it's
Tim.
$100,000.
Tim,
What are you paying Andrew?
how much was that mastermind that you were? Yeah.
What are the closing costs? Like, before you know, we're going to make 40. Well, that's a lot different than 100, isn't it?
I'll tell you, one of the things that we did too, man, is like we created an actual formula spreadsheet for every single deal. So anyway, anytime an acquisitions comes in, they're like, oh, it's going to be a great deal. Boom, boom, boom. You plug it in the spreadsheet, gives your holding costs, carrying costs, literally every single thing, plus an expectation of what goes wrong, an expectation of what could go right. You know, so, I mean, for instance, you could sell if you're flipping properties. Correct. You could sell a property, for instance, that might not be completely done, but it might finance for conventional, you know, but you're putting in 75% of the money that you were going to, but that 25% that you were going to put back in, you could just sell it, you know, a month before it's done, and it still sells, because maybe you don't have all the punch out done, but maybe you sell it for, you know, 98% of what you could have. Why put in the other 25%, you know? Someone feels like they're getting built-in equity on the back end. But we put together an actual formula to where we can run these calculations. So every week when we meet, it's like, boom, where are we at? Where's this house at? Where's this property at? Okay, boom. Do we want to try this? Do we want to try that? And we got numbers. We have data to be able to make these decisions.
Another thing that I've you were at an event recently. I think y'all were in Cabo or something, and it was you and Austin Rutherford and some other people, and it was like this chest thumping exercise. It's like, how many houses you own? How many you own? How many you? It's like the group owned like thousands of assets, and I liked it because it was real, and I know the people in there, and I know it's not BS. But we talked a little bit at the beginning, specifically with your bluff, about the BS out there, doors, even assets under management with some of these people that are just partial GPs of partial syndications. We haven't talked yet about figures. I do 9 figures.
What's that mean?
Yeah, like 9 figures what? Like, because you can do 6 figures by selling a house for $150,000 and lose money.
Dude, you could have an industrial complex in, you know, West Virginia that has, you know, 1 million square feet, you know, has 9 figures worth of whatever, right? I mean, what's it really mean?
But you seem passionate about that. Like I in your
That's
teaching,
a good word. It's a good word.
in your teaching, in your community, in your content, you're always trying to make sure. I feel like you're trying to protect the public. It's like, hey, don't get tied up in this, don't get tied up in that. But we're gonna have to take a break in a second. We talked about the door count and how misleading that can be. We talked about assets under management. We talked about the figures. What else should people be aware of in this? I mean, if we could just gotta help someone for
I mean, dude, if you smell too much sizzle, make sure there's some steak behind it. You know, I used the sizzle and the steak analogy earlier, but you know, if you smell a little too much sizzle, you gotta figure out what the steak is behind that. I personally believe that there's a lot of people trying to sell people on what they've accomplished, what they've done. And dude, I mean, I could say, hey, I own Apple because I own Apple stock, right? Or I could say, hey, I own Tesla. No, you don't. You own Tesla stock, right? So there's a lot of people that are just doing things to be able to pump up their mastermind or their coaching program or whatever. And they started in real estate in 2019. Like, I'm not calling out names, but I just feel like everyone has a coaching program, or, hey man, I've got this wholesale thing, whatever, right? I think there's way too many people trying to, going back to the life cycle of the real estate investor, you know, at a certain point, yes, you start teaching others and you start getting your jockeys, that way you can lend money and be a little bit more passive as an investor. And that's why you do it. You don't do it as your primary income stream.
Right.
But there's a lot of people that are making a lot of money on education, and that's their primary income stream. And I would just caution people against that. You know, if that person's not actually doing the business, why are they selling you on a business? Just doesn't make no sense to me.
I completely agree, and that's a great time to take a break. So stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harris. I'm here with Tarry Summers. Don't forget, click below, like, subscribe, rate, review. Let us know what you think. Tarry, it's time for the Money Minute. This is my favorite part of the show. Take 60 seconds. Tell the audience the best advice you have for them. And think of it like this. Imagine there's an entrepreneur, maybe a young Tarry, maybe a old Tarry. I don't know. There's somebody out there, and this is all they get for the next 30 days. They're going to hear this 60-second clips. So I want you to just pour into them the best advice you have off of your long, successful career. You ready?
Let's go.
Go.
So number one, especially in real estate, you need to make sure that you're willing to delay gratification, okay? Don't buy the watch, don't buy the car, don't do that stuff up front, right? Because that's future earnings that you're taking away from yourself. So learn how to house hack, learn how to borrow money from other people instead of using your own. Learn how to save money, okay? Saying some Dave Ramsey spiel, but you got to learn how to save some money to be able to invest it, and that way it's going to give you some future compound interest later, okay? Also, too, figure out how to have ownership in properties that are going to give you a massive run-up in appreciation, are going to give you massive cash flow, and are going to be things that are going to catapult your business later. Because you got to think, if you were to buy an Apple stock, right, you're going to have to put 100% of your own money up. You want to buy something that's going to have a massive run-up like an Apple stock. You only got to put up maybe 5, 10, 15% of your own money. And if you know how to borrow private money or know how to borrow from a reputable lender, you don't have to put up any of your own money. So it is one of the only things that you can get into that is going to give you massive, massive wealth growth without putting up your own money. Learn how to raise money, learn how to save money, and this business will treat you okay.
All right, so that was great. I like the little grin there at the end. But a couple months ago, I had never been to this town called Columbus, Ohio. I flew up. I met with your friend Chris Knoppe, who's a big RCM borrower, builds a lot of houses in the opportunity zones.
Great family.
Then you and I went and grabbed some lunch, and we did our podcast. Your podcast is the Scalers Only Show?
Scalers Only Show.
And where do they find that at?
You can go to scalersonly.com. You can go on YouTube. You can go on Instagram. You can go wherever you want on social media or on the internet, and you'll find it.
So after we recorded, we were going to have this really cool dinner with the mayor, Bobby, and you gave me a tour of Columbus. Knoppe had taken me around like the Opportunity Zone part.
Yeah, that was East stuff.
But then you took me like up the strip and then over into like these neighborhoods that were just gorgeous. And then out to where Bobby's family lived and where the Intel place is going to build all the chips and all this. Bobby.
Where's your sunglasses?
Columbus is cool.
Columbus is cool.
But I like what you're saying, this workforce housing where there's going to be jobs. How did you come up with that? There's a lot of people, Terry, that would have just still been wholesaling houses after 10 years in this business?
I just look at where are people going, right? We talked about this earlier, but food, water, shelter. Very simple. And where's the most amount of water? Where's the most amount of food? Where's the most amount of shelter? Honestly, like in Ohio, we kind of got all three. You know, we got the Great Lakes, you know, we got, you know, agriculture, but I'm kidding, but you know, we have a lot of blue collar jobs because we have a great university. You know, we have technology. We have a city that's evolving. We have people that are moving and migrating to the city. So when you look at where you're investing, and for me, like that's why I've kind of hunkered down and, you know, bought ColumbusHome.com, bought OhioHome.com, and tried to market myself and niche myself into my market because I want to own the market. And, you know, when the market is, you know, has all these people that are coming in and you have good jobs, not just tech jobs, but good jobs, healthcare, diverse industry, it's not gonna, like, there's no recession that can take it away. You know, you look at Detroit or some of these other cities that got decimated 15 years ago or whenever it was. You get one industry, it could wipe you out. Yeah. You know, Columbus has all these different industries, and then when you have the government that's pumping in not just billions, we're talking tens of billions of dollars into your city,
right,
and giving it a name
and
already.
Not just the state government, the federal government.
The federal government is giving it a new name, Silicon Heartland. Dude, that's something to take note of. And that's not a political thing. It's just, it's reality of the situation. You know, they're going to pump billions and billions of dollars. The airport, when your airport's getting demolished and re-renovated, that's probably a place you probably want to invest.
I mean, I left there thinking, I should invest here. Like, this is cool.
Yeah.
I want to talk a little bit about Arnold Schwarzenegger. Has a little weightlifting tournament, or what do you call it?
It's a show called the Arnold Classic.
The Arnold Classic.
Yeah, the Arnold Classic.
And where's that held at?
The Columbus, Ohio.
Yeah, and what gym was famous for?
Yeah, so it's the Pros Gym.
And do you know the owner?
Yeah.
What made you buy a gym?
So again,
because it kind of breaks a lot of your thought. It's not food, water, or shelter.
Listen, man, I came up in the fitness industry, and that's where I originally, you know, made my W-2 income for my first 3.5 years. So it was something I always knew I was going to migrate back to. But it's a real estate play because in the gym business, what you're doing,
piece of real estate, by the way.
Thank you. You're chunking up space and time and then just releasing it to people at a premium. It's a real estate play, right? But, you know, I know that the Arnold Classic is not going anywhere. And we have the official gym of the Arnold, unofficial gym, I got to say now, of the Arnold Classic. And so when I had an opportunity to buy into that business, it was like a no-brainer. When I had the opportunity to buy this bank building that was built in 1874.
That's right. You own a vault.
Yeah, I got, dude, $10,000 to open up that vault, by the way. Yeah, hasn't been open since the early 1900s. So it has not yet. So we're still working on it.
Oh, dude.
Yeah, it's like that heartbeat thing, and yeah.
Well, it was super
crazy.
Cool. I enjoyed the tour you gave me, and I can't wait to see the rooftop bar and the patio and the party place. So far in your career, what's the dumbest thing you've invested in, bought, or spent money on?
How much time we got?
Well, not much.
Man, I'll tell you what. So I was at a party with a bunch of my college football buddies, and was like, man, this beer tastes really good. Let's start a brewery. And so I started this brewery called Pigskin Brewing Company. I originally was 97% owner of that business. By the time it sold, I was 15%. It was a massive failure, and I lost a lot of friends, which is way more important than money. And that's the part that really sucks and really hurts about it. Is I lost some. I don't say I lost them, but you know, when you lose somebody,
yeah,
like just you can't really have those conversations, can't hang out anymore. You know, we kind of lost some of that stuff.
Where did that go wrong?
When I bought it, yeah.
Well, but was it not agreeing on the management structure? Was it not agreeing on the finances?
Wrong partners. I was the wrong partner. I picked the wrong location. The building went into foreclosure the day we opened. It comes out in the news that the building's in foreclosure. So we had a kitchen that was ran by the building owners that we had no idea were 51% of the business that was providing our food as our kitchen. So literally 2 days after we opened, we're like, yeah, we don't have a kitchen. Oh, we still got to pay rent. we can't just shut down the day after we open.
Right.
So it was just a nightmare.
So it sounds like a combination of maybe not. I talked about your need to understand things.
Yeah.
Maybe not understanding something fully.
Yep.
And then also a little bit of bad luck. But I feel like if you had made yourself understand all the structures behind it, it probably would have went different for you.
Maybe, but also too, timing is a big thing. One of my big things is I wanted to be the NFL of craft breweries. Well, people like craft beer because it's unique, it's rare, it's cool, and it's only cool if it's kind of underground. Yeah. But when you try to be like the BW3s of craft beer, it's not cool anymore.
What's a BW3?
It's an analogy. BW3 is kind of corporate-y,
I don't know what BW.
Buffalo Wild Wings. Yeah.
All right.
Yeah, but when you're trying to be, this corporate-y thing, that people only like it because it's underground, like you missed the mark on the marketing. So screwed up there. The timing was wrong. 2014, 15, if you weren't in 2008, 9, 10, and it was kind of one of those things too. There was another brewery in Columbus, actually, ironically, the founders went to the same university I did, and they pivoted their entire marketing strategy to be sports and craft beer paired together as soon as we came out that we were going to be a football-themed brewery. How ironic is that? And now they're one of the largest breweries in the state of Ohio. And they basically stole our idea. So it's kind of who has more money first. So if you've got a great idea and you want to bring it to the market, it's who has more money first. And I had no money, man. So
the interesting thing is I feel like the reason I kind of asked you to go a little deep into that, I think a lot of people did that with Airbnb and short-term rentals in the last 2 years. Kind of, this looks cool. This sounds fun. I heard we can cash flow. They just kind of dove off into it without really planning.
You putting a dagger in me right now?
Oh, God, I forgot. I wasn't talking about that. I was talking about the market and my customers, not you. That's right. You're a horrible Airbnb owner, too.
Oh, I'm horrible. Yeah. Thanks.
I am,
Thanks,
too.
man.
I am, too. I mean... I'm a great midterm rental owner. I'm a horrible short-term rental.
I'm just not a hospitality guy.
No.
And especially with the
I'm not allowed to reply anymore. My wife's like, stop it.
Because we're straightforward and to the point. And it's like, why am I replying when, like, even though I know I'll get to it an hour before, like, my assistant will or, whoever's the Airbnb person at that particular time, like, dude, I'm just going to screw it up.
That's what the smoke detector's beeping. Well, I can't say what I was going to say. Never mind.
I don't want to.
So we're almost out of time. No, Terry, we are almost actually out of time. How does someone out there listening that is vibing with you, which was your original advice 40 minutes ago, how do they connect with you?
Sure, man. Go on to YouTube. You can go on to Instagram. You can go on to Facebook, wherever. It's Tarry with an A. Summers, the only Tarry with an A you ever find. Kind of my claim to fame there.
Yeah.
But yeah, just go on to Instagram, hit me up. If you want to be a part of our Scalers Only Mastermind, we are opening it up for applications. We want to make sure that we're actually having people in the mastermind that are scaling, that want to scale their business. This isn't a thing for newbies. But yeah, just hit me up. I'm very active on social media, and I love connecting with people, man, because that's how you make money in this business is you connect with people. And
I want to get your actual handle because you get a lot of fake accounts.
I do, man. I do. It's at Tarry Summers, TarrySumms. Because someone stole Tarry Summers.
And not a bunch of underscores.
No underscores, no dots, no dashes, none of that.
Oh, man. You told me, you were the one that told me I made it whenever you sent me a fake profile of me. I was like, yes, I'm finally Insta-famous. 22 years of being a successful entrepreneur, and I finally made it because someone is trying to
be you.
Be me from Nigeria. All right, man. Well, thank you very much. the Tarry Summers at the Columbus
Home Company.
I almost said home buyers.
Yeah.
Home Company. Thank you for being here. I look forward to dinner tonight.
Yes, sir.
Appreciate your friendship. And thank you for being a borrower and a referral partner for RC.
I do the best I can.
Yeah. Well, but you used us first.
Yeah.
You didn't start referring until you closed some deals.
I wanted other people to use you as well.
Yeah, there you go. All right, man. Well, thank you very much. That's it, folks. We are out of time. Thank you for swinging back by. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.